All right, everyone, Lamb Research just dropped their Q2 numbers, and wow, there's a lot to unpack here. We've got this huge, exciting growth story, but then the market reaction was, well, kind of quiet. So, what's the deal? Let's dig in and figure out what's really happening. Okay, so here's the game plan. We'll kick things off with the headline numbers. They beat, by the way. Then we'll get into the real engine behind all this, what they're calling the AI flywheel. But there's a catch, a clean room bottleneck, and we'll explain what that means. After that, we'll look at their guidance versus how the market took the news, and we'll wrap it all up with our rating on the stock and a little trade idea for you. All right, Section 1, the headline beat. And really, there's no other way to put it. Lamb came out swinging this quarter. So let's talk earnings per share. They posted a non-GAAP EPS of $1.27. That's a full 9% higher than what the street was looking for, a really solid beat right out of the gate. And how about revenue? They brought in $5.345 billion. Now, that's about 2% ahead of what everyone was thinking, which might not sound huge, but it's another clear sign that demand is strong and these guys are executing. Okay, let's put it all together on one screen. You see the revenue beat, you see the EPS beat. But honestly, the real story for me, it's those margins. Look at that, a non-GAAP gross margin of almost 50%. And an operating margin over 34%, that is just phenomenal execution. It tells you this isn't just growth for the sake of growth. It's incredibly profitable growth, especially when you see revenue is up 22% from last year. Lamb is absolutely firing on all cylinders right now. So the big question is, what's fueling this fire? Well, if you listen to the earnings call, management hammered home one core concept over and over. We're calling it the AI CapEx flywheel. And this quote from management really says it all. With AI accelerating, we are ramping execution velocity. See, AI isn't just helping things along, it's hitting the gas pedal. The whole industry is scrambling to keep up, and Lamb is right there in the middle, trying to move faster and faster. So how does this flywheel work? It's actually a pretty simple but really powerful three-step loop. Step 1. You've got this massive AI build-out happening, creating just insane demand for more computing power, more storage. Step 2, that demand means we need more advanced, more complex chips. We're talking gate-all-around, advanced packaging, and all that stuff requires more of Lamb's core equipment. It's more process-intensive. And that leads to Step 3. Lamb themselves have to ramp up their own speed, their execution velocity, so they don't become the thing slowing everyone else down. And look, this isn't just some nice story they're spinning for investors. The proof is right here in the data. They're actually gaining market share in wafer fab equipment, WFE as we call it. Their new Akara etch platform, it's been so successful, they've doubled the installed base. They're expecting their advanced packaging business to grow over 40% this year. And on top of all that, they're giving back $1.4 billion to shareholders through buybacks. So yeah, that flywheel, it is definitely spinning. Okay, but it can't all be sunshine and roses, right? There is a pretty big speed bump on the road ahead, and it's not just for Lamb, it's for the whole industry. It's what we're calling the clean room bottleneck. So what on earth is a clean room constraint? Well, it's pretty simple actually. Everybody wants to build new chip factories, or fabs, to meet this AI demand. The problem is, you can't build those chips just anywhere. You need these incredibly specialized, ultra-clean factory spaces. And right now, the industry literally can't build those clean rooms fast enough. You can't install your shiny new Lamb equipment if you have nowhere to put it. And here's why that matters. The impact is that all of this industry spending, the wafer fab equipment spending, is getting pushed out. It's going to be second half weighted in 2026. Basically, everyone's waiting for more of these clean rooms to finally get built and come online later in the year. So let's recap. We've got this super powerful AI growth story, but it's hitting this industry-wide construction delay. So with that in mind, what did management say about the next quarter? And maybe more importantly, how did the market react to all of it? Well, the guidance itself was frankly very strong. For the next quarter, the March quarter, they're projecting more growth. Revenue heading towards $5.7 billion, give or take, and EPS around $1.35. Both of those are up from the quarter they just reported. Looks great, right? But this is where we get this weird disconnect. Management's tone on the call, they were extremely bullish. I mean, they were talking like they'd already won. But the stock's initial reaction? It was muted, a total non-event. It was a tale of two completely different narratives. And we can actually put some numbers to this. Check this out. The options market was braced for a big move. It was pricing in a swing of plus or minus over 6%. But what actually happened to the stock after hours? It barely budged. It moved about 1%. What does that tell you? It suggests that after the stock's massive run, all this good news was pretty much already priced in.
Okay, so let's tie this all together. We've got a great quarter, great guidance, this monster AI story, but we have a bottleneck that's pushing things out and a stock that seems to have already priced in perfection. So where do we go from here? What's our call?
I mean, this is the million-dollar question, right? Where does Lam Research stock go from here? This thing has had an unbelievable run. So can that momentum keep going, or is it due for a breather? All right, here it is. Our rating on Lam Research is outperform. Yep. Even with those sky-high expectations, we think the core story here is just too strong. Lam is a winner in an AI-driven supercycle, and we believe that trend has a long way to run.
So what are we watching for? Well, there are a few key catalysts that could push the stock higher. First, they've got to deliver. Hitting the high end of their March guidance is crucial. Second, we'll be looking for any news that those cleanroom bottlenecks are starting to ease up later this year. And then, the big picture stuff. We want to see them keep winning in advanced packaging and with the big transitions to new chip technologies like Gate-All-Around. That's where Lam's real advantage is.
All right, last section. And just for fun, let's talk about a potential way you could express this view in the market. How do you play a stock with short-term hurdles but a fantastic long-term story? The whole thesis here boils down to a timing mismatch. You've got these near-term issues, the clean room delays, the really high expectations, that might keep the stock in a holding pattern for a little while. But then you have this absolutely massive growth story that's set to really take off in 2027 and beyond. So one option strategy you could look at is what's called a calendar spread. The idea is you sell near-term calls, basically making a bet that the stock is going to stay in a range for a bit, and you collect that premium. Then you take that cash and use it to help buy longer-dated calls, positioning yourself to capture that big upside when all that new factory capacity finally comes online in a year or two. And of course, we have to say it one last time. Please remember, this is not financial advice.